Okay, as I said, Makwe Masilela from Makwe Fund Managers standing by to break down today's movements. A very good evening to you, Makwe. Not a great day on the JSE today, just under 1/3% in the red, 0.23%, with losses across much of the board. The rand looking rather bleak against the US dollar, very volatile at the moment. And I suppose a part of the story today is the export-import trading data out of China, really just spooking participants around the growth prospects of that economy.
Definitely, that disappointed the markets, as we know that China happens to be the second biggest economy. China happens to be the biggest consumer when it comes to minerals. I mean, these are the #1 importer when it comes to crude oil, the second largest consumer when it comes to the very same oil. And we know that China, they've been struggling with the economic recovery. So this is just exacerbating the situation and also indicates that Q3 numbers might show that the economy is continuing to slow, and that won't be great. Remember, when they were reopening, we were all happy that the guys, they will at least cushion the blow when it comes to other economies. But I think also the fact that Moody themselves downgraded some of the US banks, and those were small to mid-sized banks, but warned that the biggest lenders might be next, and all because they're worried about the risk when it comes to funding and also profitability. And Italy didn't help the situation because they also imposed a once-off 40% tax when it comes to their banks, and that is from the profits reaped from high interest rates, because the guys have been reprimanded that they are not rewarding the depositors. So all that dampened the investor sentiment. And as we know, the rand is a commodity currency. So commodities going down, the dollar strengthening, then it's not surprising to see the rand trying to touch almost 19 to the US dollar.
Yeah, 18 rand 95 cents at the moment, Makwe. Not a great number at the moment. What about the numbers that will come out of the US on Thursday? Inflation expected there. We did see an easing to about 3% in the last print. What are the conversations looking like in your part of the world where we might see a further easing from that economy?
We're expecting anything just around 3.3%, a little bit higher than what we saw in the previous month. And we think that if the number continues to be that low, then it will reinforce the chances that the guys come next, the next meeting in September, that is the US Fed, might pause when it comes to interest rates. They don't have to hike. But also before that, we'll be watching the CPI number that will be coming out of China tomorrow. And from that end, we're expecting a deflation, indicating that the prices continues to fall, and that's an indication that that economy is struggling. But yes, the US CPI continues to be a big number, because that will help to give us an indication where interest rates will be going when it comes to the US. And remember, the US happen to be a de facto leader when it comes to setting interest rates. People tend to follow that in order to make sure that they maintain that interest rate differential between the US dollar and their currencies.
Current company updates, Makwe. Now we've got Nedbank, Glencore out today. Let's start with Nedbank. So interestingly, they were able to increase their profits. I mean, fair enough, on the back of high interest rates, but they did see quite a number of bad debt, them having to create that the reserves for those impairments that they reported in that period. Your thoughts on what was released by Nedbank today, and really just what it says about the health of the consumer for these banks?
A harsh reality indicating that the U.S. consumer continue to struggle. The guys were at least helped by Nedbank Africa and some the wealth side of their business, but generally the business is not doing okay. Yes, they did manage to earn some nice interest income. I think it was up almost 18%, and as you said, their headlines were up almost 10%, and also some nice improvement when it comes to the return on equity, up almost 4.4% to 14.2%, but load shedding, high interest rates, high unemployment, high inflation, unfortunately, is putting a strain on consumers, and hence they had to increase their impairments by almost 57%.
Yeah, and I find the outlook also quite interesting in that they do acknowledge all of the issues that you've mentioned, the inflationary pressures, load shedding, and just the tough economic environment. But they still did issue a dividend, as was guided to shareholders. But what do you make in terms of that trading environment going forward? One would think that they would have to make more provisions for impairments in the medium term, certainly.
We hope that the interest rate hiking cycle will get to peak, and at least people will now be able to adjust their budgets accordingly. The problem will be if interest rates continue to go up, then definitely they have to increase those impairments. And in all fairness, it's not too bad for them to increase the interim dividend by 11%. Remember, as investors, that's how we make our money from dividends or when the share price goes up. So they have to reward their shareholders.
Yeah, and then Glencore, I mean, this is a story that we're seeing across a lot of the big miners lately. The lower commodity prices, challenging environment to operate in, really eating at the bottom line. Glencore putting out its interims today, indicating that exact same story.
Definitely revenue down 20%, the overall financial performance, which is EBITDA, down almost 50%, and the headline earnings per share down 58%. But as the world is moving towards a low carbon economy, the guys are well positioned to benefit from that. And as we have seen, that moderating inflation, supportive policies coming from the Chinese government, that will be handy for them. And also, when the guys look at the fact that they will be having a situation where the production costs continue to go up and the inventory levels when it comes to metals continue to be low, and also this transition demand will at least help them going forward, not forgetting the geopolitical uncertainties that will probably help the average prices to continue to go up, and probably they can benefit from that going forward.
Thank you very much, as always, Makwe, for that update. Do enjoy the public holiday tomorrow on Wednesday. That is Makwe Masilela from Makwe Fund Managers joining us to wrap up the market day that was. South Africa Tonight is coming up next with Sally Burdett. First, here's a look at your weather, and of course, we'll be back with more content around Women's Month in the next bulletin.